Hi friends, welcome to the day 4 of our 10-minute miracle series of Ie&Ifs. In today's session, we are going to revise our entire content of unit number 32 based on fixed income market in just 10 minutes. I will provide you a quick and easy concise notes. I will explain it to you, and finally we will do 8 to 10 MCQs based on what we have covered. So just spare your 10-minute time for this video. Keep everything aside, just focus on the content of this 10-minute video, get through each and every words, and you will be able to conquer this particular topic in just 10 minutes using this video. Hopefully you will watch this video till the end. Let's begin with the first topic. See, we will discuss two key types of investment in India. The first is called government securities, and the second is called dated security. So what is it all about? See, government securities are super important for Indian financial development, and think of them as a way the government raises money to fund its expenses, and like covering deficit or managing cash gaps. There are three main types of it: central government security, treasury bill, and state development loan. Now, anyone registered in India can invest, and these securities are held in a special account at the RBI called SGL account. Big investor like bank and insurance company and even non-resident buy them, and usually they are sold at a set value, which is rupees 100 through auction, and the government pays interest every 6 months. Now let's move on to the dated security. The dated security are identified by two things. The first thing is their maturity date, and the second thing is their coupon rate. That is also called interest rate. For example, you might hear something called 7.99% Government of India 2027. This just means that bond pay 7.99% interest and it mature in 2027. So these securities are highly liquid. These securities are highly liquid. It means you can easily buy or sell them in the market. They are issued through RBI auction, and even a small retail investor can participate without competing in the big bids. The maturity can range from less than a year to over 40 years. So this is about the dated security. That's a quick rundown on government and dated security in India. Easy, right? If you have any question related to it, feel free to drop the message in the comment section. Now let's move on to the next topic, that is our focusing on treasury bill, SDL, and how bonds are valued. Banks and insurance company hold different types of government security, right? So bank usually go from short-term government security, preferably for up to 10 years, while insurance company prefer long-term investment. Then there are treasury bills, and which are short-term money market instrument which less than a year maturity. Then there comes SDL, that is called state development loan, which are issued by the state government. Also come with the fixed interest paid every 6 months. These are traded over the phone or through an RBI trading system, that is called NDSOM, where the government security, treasury bill, and SDL also can be traded. That is called NDSOM. Now NDSOM and when issued market. NDSOM is a platform, negotiated dealing system is a platform where bank, primary dealer, insurance companies, and financial institution can trade. The market is open Monday to Friday 9 a.m. to 5 p.m. with settlement handled by the Clearing Corporation of India. There are also when issued market where securities can be traded even before they are officially issued. This market is only open to entities eligible for auction, like banks or insurance companies. Individual including NRI and HUF, that is Hindu Undivided Families, and NRI can participate, but only by taking long position. Basically buying, not selling. Long position means they are basically buying, not selling, before the securities are officially available. Now let's talk about something called bond valuation. A bond value depends on three key things: its face value, the second is maturity date, and the third thing is coupon rate. Coupon rate, it is a fixed interest rate it pays. Market interest rate have a big influence on the bond price. If market rate goes up, the bond price drops, and if market rate goes down, the bond price goes up. Even though the coupon rate stay constant, A bond price adjusts based on these rate change because its values is based on future cash flow it promise. That is the basic of trading platform, bond market, and how bond price work. Now let's dive into how government securities are auctioned. So that's what we have discussed regarding the how market price and market rate and coupon rate varies. Let's talk about the bond valuation. When the market interest rate is lower than the bond coupon rate, market rate is lower than the coupon rate, the bond price increases, it goes up. The value of bond is calculated by adding the present value of future coupon and the face value of the bond. To calculate bond price, we use the formula that factors in the present value and the discount factor. There are few key bond theorem to remember. See, when interest is that if the bond price when the interest rate goes up, the bond price falls, and when the interest rate goes down, the bond price rise. First point. Second point is that bond price rises when more interest rate fall than it drops when interest rate rise. Next thing is, the longer a bond maturity, the more sensitive it is its price to the change in interest rate. And the last is, the bond with a lower coupon rate are more sensitive to the interest rate change than the bond with higher coupon rate, assuming both have the same maturity. Right, these are four bond theorem which you have to keep in mind. Now, auction of government security. Government securities are issued through auction conducted by the RBI. There are two type of auction. The first is called multiple price auction, where the different winner pay different prices, and the second is uniform price auction, where all winner pay the same prices. These auctions are open to residents, non-residents, companies, FPI, foreign portfolio investor, and even central bank. Non-resident investment are governed by the FEMA regulation. The minimum investment is rupees 10,000 and its multiple, and bids are placed through the RBI e-Courier system. The bidding is based on either price or yield, with a maximum interest rate or maximum or minimum price set by the RBI and the Government of India. This is about the auction of government security. And let's talk about the methods which is used. Green shoe option methods is used up to notified selling. Now let's talk about the primary dealer. Primary dealer are the key player in the government security. They participate in the auction where lower yield bids means a higher price is paid for the security. Right, lower yield means higher premium paid. Bids that goes above the cutoff yield or below the cutoff price gets rejected. Now retail investor can also participate indirectly through non-competitive bids, which means they don't have to worry about the pricing. Now the RBI and the Government of India decide how much of the total issue get allocated to retail investor. Now this is decided by the RBI, maximum percentage of the total issue. This is about the primary dealer. They can buy and sell government security. Now let's talk about the primary dealer. Primary dealer was introduced way back in 1995 to help with the government security market, and these dealers are responsible for buying and selling government securities, and they follow a strict rule around turnover, around bidding, around underwriting and secondary market rules. PDs can be subsidiary of the bank, financial institution, or even portfolio investor, PFI. Now let's talk about FIMDA, primary dealer and FIMDA. See, NBFCs, non-banking financial companies, can also apply to become primary dealer, but they must be registered for at least 1 year. The RBI decide which institution can become primary dealer based on the needs of the market and whether the applicant is suitable. Now primary dealer has three main roles. Let's discuss in the next slide. So what are the roles? That they first participate in the auction, they underwrite government security, and they provide firm or buy sell quotes to keep the market liquid. If you want to get great insight into all of these, you can enroll in our Ie&Ifs video course program, where I have explained each and everything in detail. Now finally there is FIMDA. FIMDA is called Fixed Income Money Market and Derivative Association of India, which help guide and set practice for primary dealer and the bond market. So that's the quick rundown of primary market and their role in the market. Now let's talk about the PDs type. So FIMDA stands for Fixed Income Money Market and Derivative Association of India. It is a self-regulatory body that oversees the fixed income and derivative market in India. It works with the regulators and it develops the market. It provides training and set best practices for the industry. It can also help in arbitration and standardized documentation to ensure a smooth operation in the bond market. Primary dealer, which we talked about earlier, are either bank's primary dealer or a standalone primary dealer, and they all follow follow FIMDA guidelines. Now let's talk about the retail direct scheme, that is called RDS, which allow retail investor to easily invest in the government security online. This is how it works. First, you register online using a simple form and an OTP authentication. After successfully registration, you get an RDG account, that is called retail direct gilt account, where you use to buy security. Next you can participate in the primary market by submitting non-competitive bids. Just remember, you can only place one bid per security. Payments can be made through net banking or UPI, and if there is a refund, it will be credited back to your bank account. Once the transaction is complete, the securities are credited to your RDG account on settlement date. So retail direct scheme is a great way for individual investor or a Hindu undivided family to invest in government securities with maturity of up to 10 years. So maturity is how much? 10 years. And payments are made online, and once the security are credited, they are blocked until the settlement date. It is simple and convenient option for retail investor to enter the market. Now this is all about the retail direct scheme. 10 years you can see available security. Now let's talk about corporate bond market. See, the corporate bond market in India is still in early stage, but is developing quickly. Right now, finance company dominate the space. Most Indian firms still rely heavily on bank financing, but corporate bond offer many benefits, like low financing debts, like better asset liability management, like a way to spread out the risk, and it helps company access long-term funding and manage their capital more efficiently. The main issuer in the corporate bond market are public sector enterprises, private companies, and house finance companies, state undertaking. The pricing of this bond is usually based on a spread over government security, reflecting the risk involved. Now, bond rating help investor assess the safety of a bond, with AAA being the highest rating and D being the default rating. Anything rating BBB or higher is considered investment grade. Right. Now, fixed, there are different types of bond available. The first is called fixed interest bond, that pays a set fixed interest rate. The next is floating rate bond. Floating rate bond, where the interest rate change. And the last is called zero coupon bond. So the zero coupon bond are where they don't pay interest, but they are sold at the discount. Bond have been in demat form since 2002. That is called dematerialization, which means they have electronically stored instead of physical paper. Now, corporate bond can be traded through the institutional broker or direct trade directly between the buyer and seller. There is also something called ICD, which means intercorporate deposit, which are short-term loans between the company. These are unsecured and have interest rate that depends on company credit rating. Primary dealer have limits on how much they can borrow in the ICD market, which is 150% of their net on fund. FIMDA, the same body that oversees the government security, also looks after the fixed income market, including corporate bond. Plus, the retail direct scheme by RBI allows the individual investor to participate in the market easily. So in short, corporate bond market and ICD are important part of Indian debt market. They help company manage debt more flexibly and giving investor option beyond bank financing. Now let's recapitulate all these points through MCQs. The first question say, which of the following is true regarding the government securities? See, option A says that these are issued by the private companies to manage their cash gap. This is incorrect, because treasury bill are a part of the money market, which maturity I think it is regarding the government. Okay. So first let's go to the second question, that is about treasury market, right? And then I will come to this particular. First question is, which of the following statement accurately describe the key aspect of government security, state development loan, and the NDS OM system in India? Option A says treasury bill are the part of capital market that have maturity period of more than 1 year. So it is a part of money market, not the capital market, and it has maturity less than 1 year. So this is incorrect. Second option say NDS OM system facilitate trading of government security, treasury bill, and SDL, and is open for trading 24 hours a day. So NDS is, that is negotiated dealing system, order matching system. It operates from 9 a.m. to 5 p.m. and Monday to Friday, not 24 hours a day. So this option is also wrong. Option C says state development loan are issued by the central government with semi-annual interest payment and traded by the NDS OM platform. This is incorrect, because the state development loan are issued by the state government, not the central government, though they are traded on NDS OM platform. Option D say bank typically invest in government security with tenure of less than 10 years, while insurance company prefer long tenure. This is correct, as bank typically invest in shorter term government security, and insurance companies prefer long term, and it has been explained completely in this particular PDF. And this PDF is available on our Ie&Ifs capsule course. Every unit short notes in the form of PDF and MCQs have been provided in this particular course. Now let's move on to our next question, which is bond valuation and interest rate. The first option says, question is, which of the following correctly explain the relationship between bond price and interest rate according to the bond valuation principle? Option A says that bond price remains constant regardless of the change in market interest rate, as the coupon rate is fixed over the bond life. This is incorrect, because bond price adjusts to reflect changes in market interest rate even though coupon rate remain constant. Option B says that bond price increases when the market interest rate rise above the bond coupon rate due to the inverse relationship between the interest rate and bond price. So this option is incorrect, because this bond price decreases when the market interest rate increases, because where above the coupon rate, market interest rate rise above the coupon rate due to the inverse relation between interest rate and bond price. Option C says that a bond with a longer maturity will exhibit greater price sensitivity to the interest rate change than the bond with shorter maturity. Yes, it is correct, because bond with longer maturity are more sensitive to the to interest rate change. Option D says that a bond with a higher coupon rate will have greater price sensitivity than a bond with a lower interest rate. This is incorrect, because lower coupon bond have great price sensitivity to interest rate change as compared to higher coupon bond given the same maturity. Now let's see the next question. The next question is regarding which of the following statement correctly describe the auction process for government security and the role of primary dealer in India. First option say that the auction for government security are conducted only for resident and corporation excluding FPI. This is wrong, right? It is conducted for all. It includes resident, non-resident, corporation, FPI and central bank. Option B say the RBI e-Kuber system facilitate bidding for government security with minimum investment requirement of 10,000 in multiple of 1,000. See, this is incorrect, because this system minimum investment is 10,000 in the multiple of 10,000, not 1,000. Option C says that primary dealer can participate in yield auction where a low yield result in premium being paid, and they plays a crucial role in enhancing market security. This is correct, because primary dealer can participate in the yield auction where a lower yield leads to premium, and they can help improve market liquidity by buying and selling security. Option D says that retail investor can only participate directly in auction and are guaranteed allocation based on their bids. See, this is incorrect, because already I have told you that retail investor typically participate indirectly, not directly, through non-competitive bids, and allocation are based on RBI, Government of India discretion. It is not guaranteed. It's not guaranteed, right? Now let's move on to the next question. The next question is just I am showing you the next question. The next question is which of the following correctly describe the role of the primary dealer, FIMMDA and retail direct scheme in the context of government security. Option A says that primary dealer is solely responsible for auction participation and have no role in underwriting or providing firm buy sell quote. This is incorrect, because primary dealer also engage in underwriting and providing firm buy sell quote. Option B says FIMDA serve as a self-regulatory body that focuses only on the trading of equities in India, providing no service related to fixed income. This is incorrect, because FIMDA is a self-regulatory body for fixed income and derivative, not equities. It helps develop best practices, training and a standardized document. Option C, they say that the retail direct scheme allow retail investor to participate in the primary market through non-competitive bids and require KYC for eligibility. This is correct. Let's move on to the option number D. Option number D says that payment for retail direct scheme can be made through physical bank transfer, not net banking and UPI. This is incorrect. Now let's see the next question. The next question is question number, so it is which of the following statement correctly reflect the key aspect of corporate bond market and its component. First option say corporate bond market in India is highly developed with dominance by public sector enterprise and negligible involvement from the private company. This is incorrect, because already I have told you that corporate bond market in India is still in its early stage and it primarily dominated by the finance company. Option B says that corporate bond market are primarily placed on their spread over government security, reflecting the associated risk, and rating range from AAA to D based on evaluation. This is correct, as corporate bond market are priced based on their spread of government security. Option C says that the introduction of inter-corporate deposit allow only secured borrowing option for companies with rate unaffected by credit rating. This is incorrect, because inter-corporate deposit are unsecured short-term borrowing and their rate are indeed influenced by the credit rating of the borrowing company. Option D says that retail direct scheme facilitate direct retail investment in the corporate bond, allowing for flexible trading option. This is incorrect, because the retail direct scheme primarily focus on allowing retail investor to participate in the government security, not specifically corporate bond. So this is all about today's session. If you want the PDF of this particular session, feel free to WhatsApp me on this particular number, or the course, that is Ie&Ifs capsule course, is provided in the description section. You can enroll in that course for the PDF of each and every units in the short manner. Thank you.